I mean, when was the last time we saw 100 pip moves in dollar CAD?
It's all been one way.
It doesn't happen.
No, it's all been one way from 130 to 145.
But a grind. These are huge
Yep.
moves. It's unbelievable here. And so, what was the piece about Canada specifically? I mean, obviously there was an understanding.
It wasn't even an executive order. It was just that Canada and Mexico are in just a statement. 25% tariffs February 1st. And no other follow-up to that.
I mean, you got to give it to the guy that he, gets made fun of the we're going to buy this country, we're going to take this country and whatever. Doesn't seem to have a plan, but he comes out with these February 1st tariffs, and we get the back and forth movement like you wouldn't believe. It's unbelievable because the market is trying to price in, is this going to happen?
Right.
Is this not going to happen? It's like there's a company acquiring another company every couple
the bid's
weeks.
There, I'm pulling the bid.
But no one knows if it's
bid.
actually going to go through. I mean, again, I just can't emphasize enough. And maybe if we go to the daily chart, it'll show a little bit of this. I mean, you've got some big moves in here that are probably FOMC days, whatever they are. But this is an unreal range for the last 24 hours of. Encompassing the last month or so of price action and including a new high for dollar CAD. I mean, has it traded 145, Pete?
Interesting level, isn't it?
Briefly going back all the way to 2003 here.
Yep.
It's unbelievable.
So, I was reading a piece put out by JP Morgan over the weekend that if he calls for tariffs, they see Canada going to 158. Now, that's their gig is to make predictions.
Yeah.
Canada, I mean, that's the old highs. It wasn't rocket science.
Yeah, right up there around 160.
Yeah, right. Yeah. This kind of action reminds me a little bit of right after the election when the peso spiked up and then traded lower. We had the spike to the new high. Now we're trading a little bit lower. I don't know. I think they're going to hang on to every word and wait and see what happens. But, in the same sentence, he was talking about tariffs on China, and he said, there's no tariffs on China. And it's horrible. They pay us pennies compared to what we pay them in tariffs. And he says, except for me, when I was in office, I put on billions and billions and billions of dollars of tariffs that are still there. So it's like, well, what is it? Are we getting pennies or billions of dollars? So, I think when he doesn't like what he says, you get revisionist history a little bit. Whatever it is, he seems to have control of what he needs to change things. So I think they're mindful that this is going to be an interesting exercise for the next couple of weeks at least to see. U.S. equities got slammed really hard. When he came out with the tariff talk, U.S. equities got slammed. S&P broke 70 handles.
Jeez.
And they rallied, took them 5 hours, but they rallied 60 of those back. Mm-hmm. So
does any of this have anything to do with, is the market, now that we exist in an increasingly 24/7 world, is the market still technically thin amid all of these moves, given that it's a holiday, the cash equity market isn't open,
right.
Certain participants aren't in the global currency trade at this time? Do you think thinness has anything to do with some of these moves?
Absolutely. I think that when we see these go through, like at 6:30 at night, that is...
it's the weirdest part of the day.
It is. It's right when New Zealand and Australia are quoting FX. The rest of Asia hasn't quite come in yet. It is the thinnest period of the day. Overall, though, you've got event risk. You've got somebody who could say something that can move the market 100 pips. Every dealer is backing off on their price.
Yeah.
They're going to not get run over by a freight train with moves like this. So every chief dealer has told their junior dealers, be careful. Don't get banned. So how do you not get banged? As a market maker, you go from I'm 12 bid at 13 to I'm 11 bid at 15.
And then the market drops 50 points, and now you
got the 11th, the 8th, and you're 10 points wide. So that is just a function of the way markets will work. Yes, there was, you saw the market moved quickly through different price levels. And I think you're going to continue to see that hanging on. I mean, we got a clock now where I believe February 1st is, it's funny, a week from Saturday. So I don't know why you picked Saturday.
Yeah, exactly 2 weeks from yes. You have now less than 10 trading days until that point in time.
Right.
So, and also, I mean, we'll bring up the calendar here just to take specifically a look at the next 14 days. You had some UK data, and that's not helpful. Unemployment a little bit higher than expected. You have Canadian inflation coming out here in 45 minutes. That'll be helpful. But I just wanted to look at what the next 2 weeks looks like, because I do believe you have. Let me make sure I have all my correct places in order. Yeah, I do. Okay. You have a handful of Fed events going the next couple of weeks here.
And also a Bank of Japan interest rate announcement.
Yeah, I think that's...
Which they're talking that there's going to be a rate hike.
Is that this week? Yeah, that's the 23rd. Today's the 21st, so that'll be Thursday night going into Friday,
right.
I believe, as long as I've got my calendar. Yeah, and now the market expecting a 25 BIP hike out of Japan. Obviously, we've said yen has been really excluded from a lot of the stories that we're talking about with tariffs and everything else. But you'll have
a BOC report,
Canada expected to cut.
Yeah.
FOMC that same day it'll be a week from tomorrow here, and then you'll close out the month with a bunch of European data and the ECB press conference as well.
And that Canada and ECB numbers the Canada rate cut will be really interesting, because if they go ahead with that cut and you look at the unemployment numbers, and they're both the rate and the amount of people employed is showing stress. If they go through with that cut, they are really saying they're concerned about domestic growth, and they frankly don't care where FX goes.
Yeah.
And what I mean by that, obviously, no central bank wants their currency just to fall apart. At some point, it becomes inflationary. So you're fighting decreased growth and inflation, which is problematic.
We're not talking about Turkey here.
No, right, or Brazil or any of the number of other countries. But them on a grind from 145 to 150 or 155, again, one of the easiest ways within a certain dynamic to soften the blow of tariffs is to just basically say, I'm having a flash sale in my country. Everything's 10% off.
You and I were literally looking at Vancouver real estate on Friday.
Absolutely. And you look at New Zealand real estate, and if you think about it, New Zealand real estate actually is fascinating. It's actually the real estate market itself is a little soft there, so it's a little bit off its high. But if you think about it, if you're buying it with dollars versus 70-cent Kiwi, you're buying it at when do you go in and real estate's 30% off?
Never. It's the slimiest business of all. I shouldn't say that.
No, but what we're just saying is
you're never getting a deal.
Short of the 07-08 housing crisis, when they had like all those overbuilt condos were being sold at greatly reduced price, you never get to go in and buy something.
Never.
Marked off. So it's really incredible. And I think that was a powerful piece just for you and I to think like, wow, this stuff really is.
This is meaningful.
This is meaningful. And, we talk about the currency getting cheap. When you start to put it against, like, our world here, where, housing prices, on bad years, housing prices, for the most part, tend to not rise.
Yeah.
What we've seen over the last 2 years is a lot of rise in housing prices, which make it difficult for people to buy a home. Mm-hmm. Here, again, we're not there. We're in another country. You're looking at everything being marked down dramatically.
Yeah.
So a very interesting takeaway.
Here's again that dollar CAD move. I mean, you're going from, and even just pulling up the weekly here, you're going from a baseline in the 125 to 130 range to now. I mean,
we really had to get back
higher than
under
that?
142 to say, okay, you've got some people trapped at the top here, because this doesn't necessarily act. Again, if you want, if you felt, I missed the pop, and these 25% tariffs are going to turn out to be talking points, maybe this backs off a little bit.
Well, and I guess that's a good point. here because it's the approach that I know you and I have had personally the last several days and weeks in terms of longer term stuff. Like if you're looking at like, oh man, I want to be long or short an asset like crypto the last several weeks. Right. And you might say, man, like Bitcoin, it's 100K plus. Like I what am I going to do? I can't ever buy it again. We're in a market where it's not just crypto. It's FX, it's everything. Volatility's up.
Right.
And so you can have opportunities to buy or sell things at a lot of different price points. And you just saw in the last 24 hours, Pete, that, yeah, you look at this weekly chart and you're like, oh, man, you know, if I wanted to get long dollar CAD, I missed it. Or yesterday night, oh, if I wanted to get short dollar CAD,
you could have said that
I missed it.
At 7 o'clock at 8 o'clock in the morning yesterday, you would have said, oh, I missed the break. I missed the top.
Yeah, well, and that's what I'm saying is that you've got, you know, 150, almost 200 pips of range in the last 24 hours to get in or out of positions, new positions on. And I guess that's my point of bringing in the crypto analogy is like, you had Bitcoin at 92K last week.
Right.
And so like for you to be, oh man, I missed anything. With Trump back in office, it seems like you're going to get a lot of price points. I don't remember this volatility really for the last couple of years. And so with that, the last thing you want to do is rush and say like, oh man, dollar CAD just broke from 144.5 down to 143. I missed it. I need to get short right here. Take this greater volatility into account when you're opening and closing positions.
Absolutely. And I think it also begs the thing is, especially if you've been sitting on these, say you started selling some at 142.5, 143.5, 144.5, and they turn like they do like that. Yes, it's great. You finally got the direction you wanted. Manage some of them.
Yeah.
And it's so hard to do. It's like I've sat on these for a freaking month. I don't want to take them off now that they've turned. The one thing is, if you take off, and again, this is where position sizing becomes important. It's not a binary thing. I'm not either long or short. Again, what's great is you can trade a micro lot of dollar Canada, and it's $18 in buying power. You can trade a number of units without getting too big and manage those, because if you, in this instance, if you had taken something off, if you had been short and you caught that down move and manage anywhere along this clutter here, or where we went through towards the end of this U.S. session, if you'd managed part of them, the best possible outcome is they open another 100 pips lower.
You feel your P&L could be, obviously it still likely is negative. If let's do the exercise.
Yeah, but it's a lot less ugly than it was, and your trade location was not good to start with.
Well, let's, again.
So think about managing part of that position on these moves. With the case that if you're still, say you're short half as much as what you manage there, and the market did gap down another 100 points. You're still in a good spot. You're still making money.
Well,
but you're giving yourself a chance to reload. We're hanging on the verbiage of a guy who can talk. God bless him. He went for 3.5 hours yesterday and kind of
watch out,
go
Bruce
all over.
Springsteen.
What's that?
I said, watch out, Bruce
he
Springsteen.
Can go all over the
crazy.
map. So given that, you got to harvest a little bit in between.
Well, and you make a great point that if you're short the 140s, the 141s, the 142s, the 43s, the 44s, yesterday being able to close out, I know this isn't exactly how it works, but you close your 43s and 44s for profit, and then being able to put them back on at 44.50 this morning,
and not feeling bad if they go straight down to 40,
feels like
you still
a big
got half
win.
Of them on.
Yeah, because the worst thing you could do is see this break and having done nothing, be in the same position you were at the end of last week.
No, because you wake up this morning, and what's your decision at this point? I'm in these for another ride. Okay, well, at some point you're going to have to make a decision. The market's going to compel you to. So by being a little bit nimble and managing some of that, don't have to take them all off. Nobody is Mandrake. Nobody's going to pin the low. I'm going to cover them all. I'm going to get long, then I'm going to sell them back out again. Nobody's that quick in this kind of market. But by managing a part of them, you give yourself the best thing in the world is you manage part of them and they go swiftly below 142. Now that tells you there's a sea change in activity, and all those longs are kind of challenged. There you can actually add short. So there's lots of different ways you can build out strategy around this, but don't let yourself get not take advantage of, again, we get a 1.5, 2 times daily move, and you've got the right direction, take some of that.
Well, yeah. I mean, it just comes down to if you're trading, if your whole thing is I want to trade actively in this market and vol increases, Pete, then it is by the nature of your strategy to trade that around, get in and out of positions. Now, if you were looking at this saying, I'm going to get short all these different price points and I'm holding as an investment or a longer term strategy for something below this, then yeah, the last 24 hours wasn't for you. But yeah, if you're actively trading any market, vol seems to have increased here.
But be honest with yourself about what your objectives are going on. That's why I always say, before I put a trade on, I think about where I'm going to manage it when I'm wrong and then when I'm right. And if those make sense, then it's a good trade. So think about that two-way management piece. So, all right, let's wrap it up. Exciting day. I expect an exciting week. And again, we've got full day with equities coming back in, everybody coming back in. Bonds had a good rally yesterday. They gave some of it back. And I'm sure we're going to be hearing some interesting comments during the day. So strap in and enjoy, because we don't get volatility like this every single day. We'll see you back here tomorrow. Have a great day.